Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Last week, Salesforce announced earnings and the stock jumped 16%. So in this video, we need to sit down and discuss what happened and why. So I want to break down a few things that I pulled from Salesforce earnings and then give you just my candid thoughts on the stock. Now, whether you want to invest in it, that's up to you. I currently don't own shares. I'm not high or low on the company. I just want to pull out these things so that you can take them and use them for your own research, and also learn when these companies announce earnings and what to look for, and just say like, hey, I'm going to use this thought, this framework when I'm looking at whatever stocks that you are looking at. So here's the thing. I'm gonna start off with what I always start off with it, which is momentum / performance. Last 6 months, Salesforce was up 21% at the time that we're doing this video, and negative 8% over the last year. That's not too bad considering where we were in 2022, especially over the last 6 months. If you start to look at a chart for Salesforce, especially over the last 6 months, it is basically an escalator almost straight up, which is great for Salesforce. And in time, if they continue on this pace, that 8% is going to be gone here in a second. And again, losing 8%, which normally is not great, but where we were in 2022, losing 8% in a year ain't that bad considering the market was down near 20% at one point. Now, again, it jumped 16% last week. Here are the things that stuck out to me. So I'm somebody who I pay attention to net income. Okay, that's the money you got to pay all your bills. It's not the only metric. It may not even be the most important metric, but it's important when interest rates are going up, and especially if the business is established. If you've been around for 5, 10, 15, 20 years, which Salesforce has, you would think that you would be profitable and that you would be consistent. What stuck out to me is that they are not. So I'm just looking at 2019 going all the way up to 2022. This is net income. Profit, $1.1 billion in 2019. Then you go from 1.1 billion to just 126 million in 2020. Okay, fine. Right? Pandemic, I'll give you that. So then we go to 2021 and you go to $4 billion in profit. 1.1 billion, then you drop to 126. Okay, fine, we'll write that one off. And then you're up to 4 billion in 2022. So that's exciting. That's, wow, that's a lot of money. You basically took 2019 and multiplied it times 4. And then you come to 2022 and then you're back down to 1.4 billion. So that is very inconsistent. And if you are to look back at quarter by quarter or even year over year, it is up and down. So that's something that really stuck out to me. I would prefer consistency here, and that's something that was a little shaky. I'm not entirely sure as to why. We can go back and find out why they made 4 billion in 2021, but it's 2023. It's irrelevant at this point, right? We're 2 years removed from that and time is consistently passing. But the fact that it was not smooth and consistent was interesting. Most businesses today, or not every business, but most businesses that have been around for a while, 10, 20 years or more, are usually pretty consistent. Not necessarily flat, not necessarily perfect, but I wouldn't expect, from 1 billion to 100 billion to 4 billion, and then, these are pretty significant bounces. So that was something that was interesting. The other thing, and I think this is one reason why the stock jumped, which I don't necessarily like, is the fact they're cutting 10% of their workforce. That's about 7,000 people, and that's going to save them $828 million. That's almost $1 billion in and of itself. So if I'm looking at it from a financial perspective, if you get the same amount of sales and you're cutting basically $1 billion in cost, your profit is going to look pretty good. That's probably one reason why people are starting to kind of come back to Salesforce and come back to a lot of companies that did cut back on costs. That's not good. It doesn't make you feel good, definitely, but it's not. It's great on the balance sheet. Right, it's great on the profit and loss, not great for the people that work there. It may or may not be great for investors. I think that's one reason why it's starting to catch people's eye again. The other thing too, and this is something I do not like, I've said this multiple times before. When I talked about ExxonMobil the other day, I talked about their share buyback. They're doing a $20 billion share buyback, which means they got $20 billion sitting in cash, and they're going to go back and spend it and buy more shares. Two things here. Number one, that is going to help the stock to rise. Studies have confirmed that for years now. But also, if you had $20 billion sitting around, why are you cutting $828 million? Like, You got 20 billion sitting here. You can afford that other 828, or you could take that money and invest in other things. One thing that Salesforce did that I wasn't a big fan of either, they tried to come out with a streaming service. I have no idea where that idea is now, but they wanted to get into the streaming wars, have business related content, and have it free for people who subscribe or who already have Salesforce service. I didn't think that was a great idea. I mean, you're competing with CNBC and all the other LinkedIn's and all the other business type stuff, but also, who cares to watch stuff on Salesforce TV? Again, have you heard of the idea? I heard about it. I covered it on the podcast with Andre and ain't heard about it since. So I don't know where it is. If y'all heard of it, let me know. Would you even be interested in watching the show on Salesforce? Perhaps I should stop talking about it, because what if they pick me to host the show on Salesforce? That would be interesting. If y'all paying, let me know, because y'all got $20 billion in here. So that was something that stood out to me on the share buyback. So if you're looking just purely for a profit, and you're just looking to, we don't talk really about making money overnight. I don't cover those types of stocks. I don't think Salesforce is one of those. But if you are looking for short term, 6 months or next year, you might be able to catch, I wouldn't call it lightning in a bottle, but you might be able to catch a wave here as the stock is starting to surge and you're kind of coming in after that $20 billion. Candidly though, they're not going to put in $20 billion at once. This is going to be over time. Sometimes these share buybacks happen over years, so do pay attention to that. The other thing here is this. What stops me from putting Salesforce on any of my watch lists, what's stopping me from putting Salesforce inside the members only as a stock that I like, is the fact that since 2019, Salesforce has grown 35%. 2019, 2023, the stock is up 35%. Now that generally sounds pretty good, except that the S&P 500 was up 57%. So we're talking more than 20% by just getting index fund. Yay for index funds. We love index funds here. But Salesforce just seems to constantly disappoint. The only good, well, let me not say the only good thing. One of the biggest good things that I saw about Salesforce is when you look at their revenue year over year, they were growing above 20%, which is good, right? I mean, imagine, you bring in $100,000 one year and you get 20% on top of that the next year, and you're consistently getting that 20%. Now, some experts that cover the stock, analysts, say that that's not going to last forever, and they could start to dip below the 20% number. And I guess that's fine, but again, that's just revenue. That's not necessarily profits. They do need to control cost. I don't necessarily know if it's just cutting people is going to help with that, yes. But there has to be something else that is extremely expensive, whether it's marketing, equipment, software, whatever that thing may be, that is really kind of weighing them down from being a more profitable, consistently profitable company. That is what I'm looking at. And when you are looking at any stock and you're doing your research, these are the things you do want to ask. What are they bringing in? What are they spending their money on? Are their profits consistent? And if not, why? And then you also want to look at how, over time, how have they done? And is it even worth, I would say, well, I mean, any investment is a risk, but is it even worth putting your money in something that has such a drastic history, recent memory, of underperforming the S&P 500? The last 4 years, minus the pandemic, is likely to be a blueprint for the next 4 to 5 years, because they're only going to get but so big, and they can only do but so much at that point in time. That it's not going to always remain a new startup company that's always going to jump 20% consistently on the revenue side. That's not realistic, right? The older these companies get, taking Amazon to slow down a bit, even a Microsoft, the older and larger these companies get, the less agile they become, and the less likely you're going to see these huge returns every single year. Take a Tesla. Like right now, people are still used to seeing Tesla. I mean, at one point, we had talked about this year, they were up 70% in just a month and a half. That's great, right? That's not going to happen when Tesla is 50 years old. That's unlikely to happen when Tesla's that large and that big. They just tend to be, they become Coca-Cola in a way, right? They become ubiquitous, they become slow, you still make money, and start paying dividends, and that's not a bad thing, but you just want to get your expectations in order. So those are the things that really stood out to me. We'll also talk about Nvidia because they also announced earnings last week. I want to talk a little bit about them, but those were the things that stood out to me that I think you can take and apply. For me, again, I'm not investing in it. It's not on my list. I'm not excited about the company at all at this point in time. At this point in time, I'm not excited about it. And that's not to say I won't be in the future, right? Let me come back in June and see how I feel about it at that point in time. But right now, it's interesting. It has me to raise an eyebrow, but it doesn't necessarily make a list for me. Let me know what you think in the comments. Do you own Salesforce? Have you owned it in the past? What do you think about the company? Does any of this sway you to think about buying it, not buying it? Let me know. I have no opinions on pushing you either direction, but I do want to hear your thoughts. As always, make sure that you check out the members only. We do exclusive deep dive breakdowns every single week. This week I already gave out my spreadsheet on how I track my net worth, how the sheet works, how you can copy and paste it and kind of use it and make it your own. And then we also covered 5 of my favorite value stocks the week before. So make sure that you go and check that out. It's just $10 a month and can be extremely valuable for you. All right, that is it for me today. I will talk to y'all tomorrow. Bye.